Traders, welcome back to the channel. We're going over the Nasdaq and the SP 500. This is the SP 500 chart, and we got to break it down exactly what's going on. A major signal just came out indicating a stock market crash and a recession is upon us, and we're going to go over that and break that down exactly and tell you what to expect going into next week's big rate decision. I ask you to do two things. Consider liking, consider subscribing, because I give you the most transparent information and unbiased opinion on the way the market moves every single day. Let's get to it. There's a few things that we do need to cover. Excuse the ads here. I don't have the ad blocker popped up right now, but as we zoom in here, you're seeing a lot of these titles come up. The U.S. economy shrank last quarter, but does that mean a recession? And if you do not know, there is this false sense that two consecutive negative GDP numbers equal a recession. If you don't know, GDP numbers were released yesterday, and boom, you had a negative forecast. You had a 1.1 forecast. You came out negative 1.4. This is the first time since COVID that this has happened. You had this come out roughly at the beginning of COVID with all these negative numbers here, but now you're seeing you were kind of coming back to normal, kind of decreasing, but boom, negative right there after the inflation numbers as well. But I do want to highlight that there has been further research done. Now, I will say this is still a very big indicator that two consecutive quarters of decline in real GDP, which we just saw, we already had one, are not how it is defined anymore as far as going into a recession. It does, however, define a recession as a significant decline in economic activity spread across the economy lasting more than a few months, normally visible in real GDP, real income, employment, industrial production, and wholesale retail. Now, this is where things get interesting. So if we look here, you can see you have been getting crushed here, right? You have been declining rapidly on GDP. We go look at SPY. What's been going on the past few weeks? Downtrending. You're about to break these lows. Now, when you look at those numbers on GDP, you've been growing. So that's the misleading part here, if you will. So you can't really say you're in a recession, because if you were any other time and COVID didn't happen and you didn't get this boost, you would say, based on GDP numbers, based on the economy, you were in a recession. However, you can't really say that now, and they're trying to kind of ward off the idea of a total stock market annihilation crash. But I want to highlight this. This is something from earnings that I believe are setting the tone right now for massive, massive downside. Apple's earnings were a big step back for transparency. And so if you follow me on Twitter, then you saw what I posted. Apple refuses to give an outlook on revenue going forward right now on their earnings. So each earnings quarter, you come out and say, this is what we produced, this is what we beat, we missed. Apple said, screw it, we're not giving you an outlook anymore. Now, granted, Apple tends to beat, so if there's anyone that's going to do that, you do like it. But then you saw a company like Robinhood announce that, and you're going to see other companies come out with this as well. And this is kind of a defensive tactic if you're looking at these, because as you can look right now, Amazon reported earnings yesterday as well, and they've been getting killed. Why? Because revenue is growing very, very slowly. They're spending a ton of money, and right now they're just hurting. They missed on their overall earnings. This is bad. You barely almost made it to break even on the revenue, and then the EPS was a major shocking on the downside. So you're seeing retail. I mean, if you look at the definition, wholesale retail, Amazon, your go-to, down. Industrial production, get your build back better, so it's kind of clouding that. You got your employment, which are saying that as of right now, Powell said in his last meeting, he cannot see employment getting any better, so it's only going to decline. Real income, you are making more money right now, so we can't say that that's an issue right now, but GDP. So I think we can say two of at least these 4 or 5 are indicating a recession. Employment will start coming down very soon. You can bet your bottom dollar it's going to happen, but just know you are turning more and more into that signal. But what we're going to do for the remaining of the video is looking at the charts and what's happening. So I said, if you watched the previous video, 13.5 was our range of test on the Nasdaq. And guess what happened? You wicked perfectly there. You were getting rejected, immediate downside. Now, I also said you'd get some love going into Friday, and you got some love today. However, it's not continuing. It's stopping. You are seeing the market roll over. They're preparing for next Wednesday, which is the hike decision, 0.5. So going from this, in my opinion, you got to bet going into Monday, Tuesday, downside's coming. 12.8, you're going to retest these lows most likely, maybe even come down to 12.4, 12.5. So if I'm looking at any trade, I don't really give out trades in a lot of these videos, but if I'm looking at anything, I'm going to tell you right now, I'm looking at the 400 puts for next Friday. This video should be dropped before market closes, but that's what I'd be looking at. They're pretty nice risk reward, or UVXY $17 calls. Those are also very nice. Those are things that I'm like, not financial advice, do your own DD. Low risk, huge payout potential, especially if you just want to hold over the weekend going into Monday, Tuesday, cutting those, still having plenty of time on the expiration on those, but pretty safe moves as well. And so you're moving down on there. Now what we're going to do is look at SPY. How is SPY moving? Well, spoiler alert, it's moving almost worse than the Nasdaq, and you're about to break these lows of 415. I'm telling you guys, it's happening. You're going to at least test these lows of 410, 411 in a hurry. I'm not here to cry wolf. I'm not here to scare you. I'm here to show you what's going on in the market. I'm here to try to help you to the best of my ability every single day when I show up here. I'm trying to give you the best and most clear visualization of what's really happening in the economy. We're looking at the 4-hour chart. You can see clear bear flag breaking back down. You are going to test these 415, 416 region, whether it be today, whether it be on Monday. It's gonna happen. Fear is stepping in. And when they come out with the rate hike decision and they tell you, look, we're having a 0.5 and we're gonna have at least 5 more hikes this year, and they're gonna average 0.5, you're gonna see more and more blood. Because remember, that's where this started. I try to tell you guys right up here, that's where it started when you started getting all of that overall doubt in the market and finally coming to the realization of what's really happening. So that's where that stepped in. So what you're looking for is a test of 411. 411 breaks. We're going to be talking about the next area, which ultimately is $400 for the S&P. So that's what you got to be looking for here. The last thing we'll look at is going to be the VIX. And as you can see, the VIX got some love today. So you had a little bit of decline going into yesterday into today. You're bull flagging obviously on the VIX, and you are getting that push up. VIX is going to continue to run. They are flocking here 110%. This is what people are buying, and they see the market getting more and more bearish. And this just comes back into the theory of there being more downside on the economy overall. Before I let you guys out of here, I also want to talk about what's happening on the hidden order book. This is the hidden order book showing the heat map of the economy and what's going on. And this is S&P futures. So what I want to show you really quick, I actually want to hide the iceberg indicator from you for a second, just so you can get a better visual on the CVD cumulative volume delta, basically indicating what's really happening, what are buyers doing. As you are dipping here, you saw yesterday you were getting a steady uptrend, but as you came in today, it's been a slow bleed. Even though you've seen buyers trying to step in, you're trying to hold these key levels here. You had lots of lots here. You had thousands of lots, but you can still see they are not strong enough to break what's happening. I'm telling you, there's two things going on. People are deleveraging going into the Fed rate hike decision, which I do believe going into the Fed rate hike decision on Wednesday, it'll be the most lucrative time to try to play anything to the long side based on how we moved before, because any type of certainty could make you move in a positive direction. However, they could come out with a very hawkish statement from that meeting. But as you see here, you can just see that steady decline. So today just indicates massive amounts of selling. You're bouncing right now on that volume, but I just have to assume going to end of the day, more downside closer towards the 415 range. And then as we go and look back at what's really happening on the S&P, you can see you're just not getting any love, even on the shorter time frames. Even when you're bouncing on that volume, you're still getting killed to the downside. You're not getting any type of bounce, and you're seeing bigger and bigger sell orders stepping into the market as we speak. So as I'm looking here, I have to just take a look and say, the market doesn't look safe, especially when we look back at this GDP number right here that was just posted. I know the Fed is going to talk about this, and there could be nothing positive to be said regarding this number. And then we have the inflation numbers coming back out very soon as well. This just keeps everything in the back of your head saying, what else could happen? What other news could they come out and say is very bearish in the economy? Or how could they even react to this overall data being released in a positive manner right now? So going into the beginning of next week, what are we betting on? What are we looking for? We're looking for the S&P to come back down into this range between 416 and 410. I see support at 415 and then about 412, 411. Those are your two major key areas. That's where the S&P most likely tracks to Monday and Tuesday. Now, Wednesday, crazy whips all day. Halfway into Tuesday, into the day, you're going to see a lot of whipsawing as well. Going into the Nasdaq, what are we looking at here? Where do we see this going? Going into Monday and Tuesday, you're looking for another retest of 13,000 right here. If you break below that, you will test those lows of 12.8, possibly come down further to 12.5. I'm letting you know right now, if you do not hold this support here, you will break down in a hurry and sellers will come crashing in. For instance, look at what's happening to tech right now. Apple, nice push, but Nasdaq got rejected. Boom, Apple came down. Netflix, you started to get a bounce yesterday. You started to get it. Guess what? coming right back down. Microsoft, everything's double topping, more bearish indicators across the board. NVDA, one of the best performers. Look at that. Boom, shot back down. You're seeing semiconductors in general all getting slapped. This is showing you the scale of the economy. As usual, have a good one, traders. Consider liking, consider subscribing. More content is coming. Have a good one. Now, before I let you get out of here, I got to give a special shout out to the sponsor of this channel and a sponsor of this video, Margex. Now, Margex is who I do all my Bitcoin leverage trading. I don't use Coinbase or anything like that because I'm trying to trade spot leverage on these, kind of like trading futures. This is how their platform looks, and they're actually tied right into TradingView, which is the software I use to do most of my charting in every single video. So you don't even have to leave their platform to do that. Now, personally, I leave Bitcoin in here as well, but I'm always transferring it into USDT, so I'm never losing value. But it's just like trading the stock market crash if you really look at it. Looking at the past 4 hours on this chart, you can see it is a straight nothing but downtrend, and I've been making money off this as well. It's extremely easy to transfer off, and the customer support has always been nothing short of the best from my personal experience. If you do sign up with them, you will get a $50 bonus, and if you ever have problems with them, you can always just reach out to me on Twitter, and I will personally help you along the way if you do have issues. So I can actually say I vouch for them, and I do use them every single day, or at least every week when I'm trading Bitcoin. But let's get back to the video.